Hello everybody, welcome to today's special webinar. We are completely full, so please don't leave the room. All our seats have gone, not surprisingly, because there's a very interesting week in trading coming up. We've already seen some very big volume in the Forex and the futures markets, as well as several stocks. So we know something's happening. Of course, it's not surprising. This is the week of the inauguration of Donald Trump in the US. And of course, markets do love, if you see these alerts coming up, don't be put off. I'm running TradeStation in the background for stocks, which I'll talk about later. So I am monitoring 20 stocks at the moment that I'm looking at very closely from an options perspective. We are going to look at live charts today. Just before we start, though, just introduce myself. My name is Gavin Holmes. I'm a professional fund manager here in the United Kingdom. I'm running the Wyckoff Williams investment portfolio. I'm also the author of two books. The first book is called Trading in the Shadow of the Smart Money. Some of you will have read that book. If you're not familiar with the book, it's all about really how to read a chart based on what we call volume spread analysis, which I'm going to show you today. Thank you, Will. Appreciate it. I'm on my third book at the moment. I'm very busily writing a third book, but it's nothing to do with trading. So I'll keep you all in suspense on that one, but I'm hoping to release that in the next few months because it's been a long time coming. So what we're going to talk about today is using something called Smart Center Pro, which I know many of you in the room have already got, and some of you haven't. I want to welcome, by the way, all the team from Phoenix who are, and I say Phoenix Investments, I want to welcome you all. I know that you've just got Smart Center Pro and you're obviously wanting to know how to use it. I'm going to show you today with some actual charts some of the settings that you should be looking for. For those of you that have already got Smart Center Pro, today is very much showing you the optimal settings that I'm currently using for the system. Now we're going to start off, if I may, by reading a very important disclaimer because Trade Guider Limited is registered here in the United Kingdom. I'm broadcasting from the New Forest National Park in a place called Lymington in Hampshire, which is right opposite the Isle of Wight in the United Kingdom. But I did spend many of my years trading in Chicago, in downtown Chicago. I lived right in the heart of Chicago, and I was there for 14 years and had a great time. And obviously that's where I learned my craft as a trader. So I just want to read the disclaimer to you. Trading stocks, options on stocks, futures, options on futures, and retail off-exchange foreign currency transactions, Forex, involves substantial risk of loss. It's not suitable for all investors. Past performance, whether actual or indicated by historical tests of strategies, is no guarantee of future performance or success. There is a possibility that you may sustain a loss equal to or greater than your entire investment, regardless of which asset class you trade, equities, options, futures, or Forex. Therefore, you should not invest or risk money that you cannot afford to lose. Trade Guider Limited is an authorised representative of Forex Max Limited and is regulated by the Financial Conduct Authority in the United Kingdom, number 229906. And yes, my book indeed, Michael, is all about the law of attraction, which is a very, very big thing in my life. It's created a lot of my success, and I'm going to share some of the knowledge that I've gained. I was 50 last year, and I've learned a lot of things in the last 15 years, especially from trading these financial markets. I'm going to share some of those with you today. Now, before we move on, I want to just go straight to a chart and show you what we're going to talk about here today. Now, on your screen shortly, you're going to see, you should all be able to see an MT4 chart running. Okay, tell me when you can see that, please. You should be able to see an MT4 chart. Okay, I'm going to explain this all to you in detail, but I just want to make sure you can see it first. Okay, so this is an MT4 chart with a trade alert that's come from our Smart Center Pro. Okay, now this is the alert that came in about 4 hours ago now. And in fact, I want to share with you a very important VSA signal or principle. Now you can see here that basically we've got a lot of red indicators as the market moves up. And that's because when weakness appears in a chart, I mean opportunities to short, it happens as they mark the price up. And you can see here we've got VSA, we call them VSA indicators, which is what they are. It tells me that there's no interest in higher prices, no demand. And over here, no interested in higher prices. And so here we decided to look for short trades. Now, if I bring up the scanner, this is the alert that came in. But I want you to notice this, because that was the reason that I looked for short trades in this instrument. This is what we call a 2-bar reversal. Now, for those of you that are new to all this, don't worry. We're going to get to this in a lot more detail. but I want you to understand what we're looking at when we talk about volume, price, and most importantly, trend alignment. Now, the Smart Center Pro was developed for fund managers, institutional money, and in fact, in this room, we have 20 traders, institutional traders, that are currently just about to start using this platform. So I want to explain to you guys what we look for when we're looking for trades. Now, one of the things that we base all of our teachings on is on the original teachings of Richard DeMille Wyckoff. Some of you will have heard of Wyckoff, some of you may not have heard of Wyckoff, but Wyckoff lived in the 1920s and 30s, passed away in 1930 and 1936, I think it was. But Wyckoff was an expert in what we call tape reading. Now, what is the tape? The tape in our particular era is volume, and it's the activity of the professional side of the market that we're interested in following. Now, if we look at this scanner here, this is the alert that's come in. It's for a short trade on this instrument. You can see that we've got a red box on the weekly chart. W means weekly time frame. D means daily time frame. Let me just make sure you can all see that. I'll just put the spotlight on. So looking at my spotlight here, oh, it doesn't work with the spotlight, so bear with me. Let's put the normal drawing mode on. That's it. Okay. So going back to the reversal, what we can see here, if you should be able to see my pointer to the left-hand side here, on the Smart Center Pro here, okay, this is searching for trades. All right, it's searching for trades based on the Wyckoff method and volume spread analysis. We note that the weekly chart is red, which means it's in a bearish move on the weekly. The daily chart is grey, which means it's neutral on the daily chart. The 4-hour chart is red. The 1-hour chart is red, which again is bearish, so it's aligning with the biggest time frame that I monitor on these forex charts, the weekly. They're aligning. We can see the 30-minute chart is red. The 15-minute chart is red. And over here on the 15-minute chart, nearly 7 or 8, well, what is it now? That'll be about 7, 8 hours ago. We had a serious sign of weakness. Sign of weakness 126. 126 is what we call a reversal. And on the 5-minute chart, we had what we call no demand. Now, if we note what's happening here, there was the entry up here. You can see the 2 signs of weakness that appeared. One there and one there. Okay, I'm not going to bring the dialog boxes up. We can see them for ourselves. The market has now trailed itself down, so I've moved the stop to where this blue line is, which is built into the Trade Guider software program. It's called a chandelier stop. Many of you may not even use it, but it's a very good way because the market does pop up and down, as we can see. It tried to stop me out here, didn't catch me. Now we can see it's trying to push back up, which is very, very normal when the US market opens. And we've got the London fix. And the London fix is when they set the LIBOR rates, which affects all the currencies and forex charts at 4 p.m. London time. Now, if we look in the background of this chart, we can see the weakness as the market's marked up on very, very low volume here compared to the previous 2 bars. So there's not a lot of effort to rally. And over here, the volume is much less on this up move. So again, it's telling me that professional money at that level are not interested in higher prices. However, as I always teach, the trend, I know this sounds obvious, but it is obvious. The trend is your friend. If the price is moving lower and downwards, you want to be looking for shorts as the market is artificially marked up into these areas. And I'm going to show you this in the futures charts as well. I'm looking at the moment in spot forex on MT4. Now we can see here that we've got an alert here on the Swiss franc and the euro. It's telling me that the weekly, the 4-hour, the hourly, the 30, the 15-minute is all down. And we've got weakness here, sign of weakness 58, which is a trap up move on the chart. Now we can see it here, the trap up move. Now a trap up move is a serious sign of weakness in its own right. So if any of you are looking at forex at the moment, I'm not trading the euro Swissy, I don't trade that instrument, but that is an alert and it's come in on that chart. Now I've got quite a few alerts coming in at the moment on the futures contracts, which I'm going to show you in a minute. Right, the chart we're currently looking at is a 15-minute chart here. For those of you, this is the tab, Euro Aussie dollar, 15-minute time frame. So each price bar represents 15 minutes worth of data. Okay, now I usually use the 15-minute chart if I'm swing trading in the market, meaning I'm going to be in the position for sort of 3 or 4 or 5 hours. If what's the long equivalent to the trap up move, stopping volume would be the equivalent. Stopping volume would be the equivalent of that to go long. Now, what do you all notice, of course, about these proprietary trending systems that are built into the program? Well, first of all, this is TradeGuider MT4 plugin. So it plugs into the MT4 platform. But we also plug into TradeStation, NinjaTrader. We have a plugin for Metastock, also for Sierra charts, and also for Infinity AT charts, which I'm going to show you shortly. Now, what we notice about this particular instrument that we're looking at the moment is we have 3 ways, in fact, we have 4 ways of measuring the trend of price. And it's very visual and very simple for a human being to get this. Because one of the most difficult things I found when I started studying the Wyckoff VSA method was not understanding the principles, because I understand them. It was finding the setups as they happened and then executing my position as the trade appeared. Now, the great thing about Smart Center Pro is, as you can see, I'm just monitoring all of these instruments at the moment. All of these are now looking for trend alignment. So the Swiss franc versus the US dollar, the Euro USD, the USD Japanese yen, the USD CAD, the Aussie USD. You can see all of these instruments are being monitored. The one that triggered today, for me, a very strong trade was the one here, the Euro Australian dollar. And the reason was the weekly chart, which is, by the way, for those of you with Smart Center Pro, always pay attention to the biggest time frame first. So if you're going to be looking for short trades, you want the biggest time frame to align with these smaller ones. The reason
alignment to the upside has arrived.
Okay, I've just had an alert on the NASDAQ on my futures contract in Smart Center Pro. So we'll come to that in a second. But we're always looking for trend alignment to match the biggest time frame possible. Now, one of the things I was asked in an email from one of the guys from Phoenix there is, Gavin, what targets do you set for yourself once you're in a trade? Well, the answer, John, because I know you're in here, is I don't anymore. And here's the reason why. I'm using the trailing stop mechanism, okay, in the program, which basically, once you're in the trade, you move the stop in harmony with the blue line. Now, this is a proprietary system that was invented about 17 years ago by a London professor who gave the code to Tom Williams. And Tom Williams is the man that invented VSA. And what this is doing, it's measuring bullish versus bearish volume in a trend. And then it's moving the price down based on something called Wells-Wilder, which I won't bore you with. But it's a very good way of keeping in a position longer than you probably would. Because one of the difficulties many traders have is once they take a trade, they see the market go down and go up against them, and they close the position, say, oh, I've made a bit of a profit. And then they see the whole thing take off again and make a new low. And where they've closed out for $1,000, they could have made $3,000. It's a very common problem for the retail trader. This has now been removed with Smart Center Pro, because what we do is we're able to look at the trend of price, to look at the principal, to bring up the scanner, and then identify where the market is being reversed. A reversal, if we read the description box, which is causing this down move, the indicator is based upon the action of 2 bars. The first bar is an up bar. Let me define that for you. An up bar is a price bar that closes higher than the close of the previous bar. I repeat, when I refer to an up bar in today's lesson, an up bar is a price bar that closes higher than the close of the previous bar. Please don't make the mistake of thinking it's just got a higher top or a higher tail. It's the closing price that we look at in volume spread analysis. So we're looking at the closing price on the bar. And the close is very relevant. Whether it closes on the top of the bar, the middle of the bar, or the bottom of the bar is very relevant. So here we have a reversal. And we can see here, if we come down, there should be a period of rising prices, which there was before the reversal appears. This setup shows weakness. When we refer to weakness, right, weakness means shorting opportunities. When I refer to strength, it means buying opportunities, okay? So if you hear me today talk about weakness on a chart, it means there are shorts to be had. If you hear me talking about strength in the market, it means there are longs to be had. And in the NASDAQ at the moment, there is definitely some strength coming in. Okay, so that's what I'm going to focus on in a minute. So this is weakness on the chart. And this scanner that you're seeing here, the symbol scanner, is connected to the Smart Center Pro. You can't have one without the other. You can have the scanner without Smart Center Pro. You can still get that. But Smart Center Pro feeds off this scanner. And it then scans all of the instruments to give you the trade setup. Okay, is there any questions on what I've shown you so far before I get into the logic behind all of this? Is there any questions so far? So basically, we've looked at shorts because the weekly trend is down for the last 2 weeks. The daily trend was down yesterday. The 4-hour trend was down with signs of weakness in the background. The 1-hour chart was down. The 30 minutes down. The 15-minute chart was down a few hours ago here, a reversal. And then this is just going into congestion now because it's being marked up, not surprisingly, because we're into the London fix. So again, if it pushes back lower again, that's fine. If it gets stopped out, you can always get back in. What are the small letters below each block? Right, that's telling you, Mike, which time frame, all right? So let's focus in here on the Euro Aussie dollar, right? W1 means weekly chart. D1 means daily chart. H4 means 4-hour chart. H is for hour, 4 is the time frame. H1 is 1-hour chart. M3 is 30-minute chart. M15 is 15-minute chart. M5 is 5-minute chart. M1 is 1-minute chart. I have a number of customers at the moment that are only using 1, 2, 3, 4, 5-minute and 6-minute, 7-minute charts. They're just using very small time frames to scalp. That's all they're using. So you can use this for your style of trading. It doesn't have to be what I'm doing. This here, this scanner comes automatically preset with these time frames in it, but you can change these by just going to the settings tab, okay, and actually setting the parameters here. And you can also ask the software to find which VSA principles you want to actually look for, okay? So but we'll talk about the settings in a minute. So that's what it's doing, Mike. It's actually looking at the time frames that you choose. Now, I personally find these time frames are by far the best for my style of trading. And my style of trading is 2 styles. It's swing trading the market when I'm looking at Forex and futures, and then scalping the market, which is why I have that 1-minute chart up, because the 1-minute chart is very useful for picking up quick turning points in the market, as I'll show you on the NASDAQ shortly. Kat says, how do you tell when the market has changed for the trend? Which starts on the faster charts? Well, Kat, the 1-minute chart, the 5-minute chart, the 15-minute chart will turn the first because they're the smallest time frames. But you see here today, when I'm short here on this instrument, you can see the weekly is not going to change its direction because it takes a week to change. The daily was neutral. But notice when I was on air earlier, when I was doing the demo earlier to this group of traders, everything here was red, everything. So you will find that the smaller time frames, I mean, if this starts to push lower again, which I suspect it will, you'll see this turn red, and then the 5-minute will turn red, and then again, you've got complete trend alignment. Now, Tony's saying, why are you using 3 different volume indications, right? Because they're all looking at different things, Tony, right? One of the indicators, these diamonds, which you see here, which are proprietary, they're part of our system, uses a short-term trend. So it's looking at very short-term. So if you're looking at a 5-minute or a 15-minute chart, if they're all red on, say, a 5-minute chart, the short-term trend is down, which you can see quite clearly from here to here on the 15-minute chart. We have not changed trend. The market's fallen. Tony, that's the reason that's happened. If we then look at what we call the medium-term trending system, which is this red box, that is looking at bullish and bearish volume. Now, that's really a different way of looking at what the short term does. let me just explain what bullish and bearish volume is. Bullish volume, okay, is increasing but not excessive volume on an up bar with decreasing volume on the down bar. It mustn't be ultra high volume on that up move. That's bullish volume. Now bearish volume, you can quite clearly see here. It's increasing volume on the down moves and decreasing volume, as you can see here, on the up bars. Hence the reason this has made a low, another low here, and from the top here you can see that it's made a lower top here, a lower top here, and it's come back down here. There's where the stop is here on the blue line. It came up there and nearly stopped it out, and now it's trying to push it up again. May well take me out on this one, absolutely fine, because this trade itself, if it runs back down, if this closes on its low, it will be what we call an up thrust. If it pushes up on its high, it means they're marking it up, ready for the next move. Mike says, Goldilocks volume, not too high, not too low. That's exactly right. The perfect volume, we don't want, anytime you see massive volume on a chart, be aware, right, that is too high. Very high volume on a chart will mean that there is some selling going on, some supply present. Someone's panicking, either to the upside or the downside. It causes that high volume. Havinder says, how many VSA principles are there to learn? Well, really, there's only 20 if you understand VSA. If you read my book, there's really only 20 that you need to understand. And they're all included in the course that goes with the software, Havinder. 10 to the upside, 10 to the downside. That's it. Once you understand those 20, you've got it. You understand it. Yes. Yeah, Will, it's not a silly question because I'm actually doing it. Will says, can you overlay the Weiss wave and tick data for Forex to work with Smart Center? Yes. Yes, you can. Got several people using Weiss wave already doing it. I've got my own version of a wave that I use, but it's the same thing. I don't show it publicly. It's for the hedge fund. But the answer to your question, Will, is yes. You can absolutely do that. And yes, Mike, it does induce the herd to panic and continue with the move. Now, if we go now, you've got all your questions out of the way. It's really straightforward. There's nothing complex. We're looking at trend alignment. That's the first point to look for a trade. We're looking for a VSA principle. Now here, if I left click in the box, it's now searching here for a trade setup. Hold on a second, that's my wife, I just better tell her. Yeah, I'm in a webinar. So we're looking for a trade setup again here to the short side. And you can see it's put a cross in there. So any signs of weakness that appear again in this trend will give me an alert. When an alert appears, see here, on the Germ 30, the DAX, you can see it's green, so it's looking for longs. Left click here, it's looking for longs. Here, the Euro Swissy, looking for shorts now. All now sniffing out trades. As soon as it sees the print, I just got filled there on the on that particular instrument, there'll be more. But on the futures market, as I'm about to show you, there's a lot more going on as well. Forex is a bit quiet today, but on the futures market, a lot more. Now, Pet says, I don't believe in volume on the Forex. Forex is way too big to even have a small percentage of clue about volume. Futures market is not enough to get a real picture. If you use tick volume, it depends at liquidity provider. Okay. Well, first and foremost, you've just seen me look at volume on that chart, the MT4 platform. But let's go and have a look then at volume in futures, because that can't be, it's not like tick volume, which is what you're seeing in MT4. This is actual exchange traded volume. So you can't mess around with the volume. It's either real or it's not. And recently I did a live trading seminar at the Chicago Mercantile Exchange, live from inside the exchange building. Now I know, right, that when they're doing their volume on the computers, they're producing volume from the exchanges you're going to see. Stephen, I was using the H stops. That's what that was, in fact, that you just saw in that blue line. That is in fact the H stops. And to turn them on, you just basically left click on the price bar and it says true or false under stops. Put it to true and you'll get what I've just shown you. All right, so let's move forward then and we'll start looking, and I'll just show you what we're going to look at as we go forward in today's seminar. So I'm going to give you a little clue as to what we're, please tell me when you can see my screen. You will be able to see, hopefully, the NASDAQ coming up. And again, just let me know when you can see it. You should be able to see Smart Center Pro for futures now. Can everyone tell me when they can see my screen? Okay, let me just have a quick look at the panels, just make sure you can all see it. Okay, thanks. Okay, guys, thanks. So basically here, now we're looking at futures. I'm using the Infinity AT charting platform, which is basically Sierra Charts white label. It's particularly good for me personally because it works for stocks and it works for futures, and I believe it works with Forex as well, although I don't use it for Forex, but I use it for futures and for stocks. Now, at the moment, I'm monitoring all of these futures pairs, okay? Now, we'll start off, you can see all of the, I'm not going to go through every single symbol because it's a waste of time. If you're not a futures trader, you know, just know that these are all different symbols. You know, the 6A, for instance, is the Aussie dollar. The British pound is 6B. I've got an alert that I'm looking for, but I'm going to take that off now because basically it's not in trend alignment. You see the weekly's red, the 4-hour and the 8-hour are green, but look, the 60 and the 15 are not agreeing with these time frames. So it's telling me it's in congestion, means no trade there. The Japanese yen, no trade. The ES at the moment, not there, no trade. It's neutral, it's whipsawing. But what is interesting today, right, which I find fascinating, is this. Now the NQ, the NASDAQ, is actually flashing up here a potential long trade, and it's been doing it pretty much all morning. So what I'm going to do now is once it flashes like this and it's black, it's just telling me it has trend alignment. It's not telling me there's a trade here yet. What you have to do when it starts flashing is left click into the window. Now it's searching. Okay, now it's active. It's actively searching for long positions because it's looking for trades within the trend. If I close this Smart Center Pro down here, it's not closed. It's working in the background. So if I go to the NASDAQ here, and we'll put up a 15-minute chart, in fact, even a 5-minute chart, I can see why it's looking for long trades. I mentioned to you at the beginning that weakness appears on up bars as the market gets marked up. It's the total opposite when you see strength coming in. Strength, when it appears on down moves. And the reason is professional money don't want to buy up at the price up here. They want to buy lower and sell it higher, which is why the markets do what they do. Most traders who use stochastics, moving average, all of those things, will tend to buy into these up spikes because they don't know any different. They've been taught by many, many educators to use a stochastic, and if it lines up with a MACD, as it will do as the market's going up, get long, and as soon as you get long, they kill you. That's how it works. If you understand that when the market falls, you should be thinking of buying, as we can see here, then you'll understand the truth about the markets. And here, they test this level, and they're coming back down to retest this level. Very common occurrence in the NASDAQ, because you've got that same signal that we saw on the Euro Aussie. The same thing just happened here about 20 minutes ago, which is why the price is falling. And this is something you'll learn. And with Smart Center Pro, if I put the Smart Center Pro back up, what you'll see here is that a lot of the markets today, not surprisingly, because Janet Yellen is speaking later, are in congestion at the moment. So what this tells me is there's no trade yet here at the moment. The only one I've seen today is that Forex chart, and at the moment, potentially a long on the NASDAQ. That's fine. Most traders don't know when not to trade. Smart Center Pro will tell you. If you see what we call the Christmas tree, right, which means you've got green, red and grey, everything's all mixed up, nothing's in alignment, it's telling you sit on your backside, put your hands underneath your back, underneath your legs, and don't move. Wait. And I've had to wait sometimes 5 hours for a trade. Sometimes I've waited all day, nothing happened. Do you know something? I protected my capital account. I was very happy. But when you do get a trade and you look at the trade and it makes sense, and we'll teach you to make sense of it, that is when your position comes in. Now, a question came in, how long have I been trading? About 16 years, Steve, about 16 years. Do I come from a trading background? Okay. Do I come from a financial background? No, I don't. Let me just explain a little bit about, as we move forward, what we're going to show you here. I believe that whatever you believe, you can conceive. So whatever you believe you want to be in life, you can achieve it. Doesn't matter whether you want to be a professional golfer, Michael Jordan, professional basketball player. You look at some of the great people in the world who do great things. They often started out in life as nothing and then became something. Now, if you want to become a good trader, it's your birthright to become good at something. But in order to become good at anything, You have to, first of all, practice. Secondly, you have to put in a bit of effort. It's called effort versus result. It's a universal law. A little bit of effort can often produce big results. The third thing is very important that I learned is you've got to believe in yourself. If you don't believe in yourself, you might as well give up trading, because belief in yourself is a very important part of making money in the markets. If you read chapter, I think it's 11 or 12 of my book, I can't remember which one now, but it talks about the law of attraction. Very important part. It's basically believing in your human ability to make it. And with this system that we've got, we have simplified as best we can the Wyckoff volume spread analysis method. Now, I don't come from a financial background at all. My background was a police officer. Many of you will know that. When I left school, my ambition was to be a police officer, and I did very well for the 5 years I was in the police. And then I was injured on duty, so I had to retire. I left the police force and had to find something else to do. And I decided very early on that I wanted to do something that was not sitting behind a desk all the time. Funnily enough, now that's what I do. So I went to start a jewellery company. I went to work for a jeweller. And then I started my own businesses when I was 28, and I've never looked back really. But I was very fortunate 17 years ago now to meet Tom Williams, who unfortunately passed away in November last year. And this is Tom and myself. We do seminars all over the world, speak to thousands of people about the truth about the financial markets. And when I'm going to talk about the truth, I'm going to talk about how the markets really work. Not what you see on TV, not what you read in the Financial Times, but the truth about the markets. Now, some of the things I say are, somewhat controversial occasionally, because I talk about market manipulation in my book. Let me ask you all a question, actually, if I may. And I just see a few questions coming in. Mike says, the NQ entry is not here yet, Mike. This needs to be very clear, right? The NASDAQ entry is not here. Okay, let me show you why, right? All it's told me, all that Smart Center Pro has told me, is that the trend is aligning in the big time frames, okay? And these smaller ones now have gone into neutrality, which is called whipsawing. So I've put the cross in here and said, show me a sign of strength when it appears. Let me repeat, that is not a trade yet, because it's not flashing with a VSA indicator. When a VSA indicator appears, let's say it's on an hourly chart, and it's a test in a rising market aligning here, that would be a trade setup. But that's not a trade setup yet, just to be clear. So Mike, just want to be clear on that, because if someone says, oh, hold on a second, Gavin, you just said there's a trade in the NASDAQ now. I didn't. I said there's trend alignment on the big time frames, okay? And the other time frames now need to fall into alignment, and then we need to see a VSA signal like this in one of the trends. And as soon as it appears, it's going to warn me here, and a voice is going to come. A voice will come up. You'll hear it in the background. It will say trend alignment to the upside or the downside has arrived. In fact, let me just show you that quickly before we carry on. I'm just going to switch back to the scanner manager, which is here, and we'll switch back to Smart Center Pro, and listen very carefully as I bring it back on. And we'll see if, again, as I'm talking here, we'll see if it actually comes up. What happens if it finds trend alignment? You will hear a voice. It's actually my business partner, Richard. And he comes in and he says, trend alignment to either the downside, if it's red, has arrived, or if it's green, trend alignment to the upside has arrived. Michael says, you described what the medium-term trend is calculating. Could you mention what the volume thermometer is counting? It's very similar. It's very similar, except that it's using more price bars than the medium-term trending system, Michael. So basically, the medium-term trending system that we're using with the coloured bars and represented only looks at 1 or 2 bars, whereas the thermometer is much more averaged. In fact, I can tell you it's 7 bars. There's no secret there. 7 bars. Okay, so we'll leave this in the background to run. I'm going to just close it down here. As soon as it sees something, as I'm doing this presentation, you will hear it come up. So we launched the Smart Center Pro live at the Chicago Mercantile Exchange. That's me there. We traded live. We took live trades in the exchange, which was quite good. This is Dr. Gary Dayton. Some of you know Gary. He's a Wyckoff expert. Abraham Cecina, who's just gone to join a prop fund, trained in VSA, and Lauren Snedeker, who helps us with our VSA club. Now, we weren't invited to speak at the CME group because we sell a load of rubbish. We were one of the first educators to speak there for some time. And the reason is, and I asked the CME, the head there, why we were invited in, and it's very simple. Because he said, you've got a serious piece of software. And they want people to make it in the markets. People saying the exchanges, someone said to me, Gavin, you write about market manipulation and that you're trading live at the exchange. I don't understand. I said, it's very simple. The CME and all the exchanges want traders to keep trading because they make money from the commissions. It makes total sense. So they don't care if I talk about market manipulation, because the fact is, it is a real thing. In fact, let me ask you all a question before I move on. How many of you here think the markets, just hold on, let me just answer this question here. Themistocles, he says, given the fact that participants in the market are differently capitalized and information is not evenly decimated markets can be manipulated and will be manipulated, right? Isn't that right? Yes. Do you agree? Yes. And I'll show you now a video. You've led me nicely into that. A video here, 10 minutes, won't be long, but I want you to pay particular attention to what they say about Qantas in this video. Pay particular attention to what happened with Qantas. And I'll tell you why, because the news was incredibly bullish about the stock and it collapsed over the next 4 weeks after the news came out. That is in its own right manipulative, because they tell you to buy a stock at the top when in fact you should have shorted it. Have a listen, and I'll be back with you here in about 9 minutes.
What is a smart trader? A smart trader is someone who knows how the markets really work. They know how they move, why they move, and who and what moves them. Armed with this knowledge and understanding, they can trade in the markets alongside the major players. Smart traders are in the minority. The majority of retail traders and investors do not have this information. They rely on technical analysis and fundamental analysis to predict market movements. The problem for them is that on their own, these tools and methods don't work, which is why the large majority of traders lose to the markets. Remember, the market needs losers, many of them, so that the informed minority can win. Today, we'll show you how you can become a smart trader, trading in harmony with the professionals rather than trading alongside the herd. So why do so many traders lose? They lose because they've not grasped some fundamental facts which drive all markets. Fact number one. By far the largest players in the market are the hedge funds, investment banks, trading syndicates, such as Goldman Sachs, George Soros, and Berkshire Hathaway, headed up by Warren Buffett. These are organizations you've probably heard of, but there are many others which aren't publicly known. But together, they're by far the biggest players in the international trading community. At TradeGuider, we call them the smart money. Fact number two. The smart money have to make money, and they do this by selling at the top of the market and buying at the bottom. Fact number three. In order to do this, they have to move the market so that the prices rise to the top or fall to the bottom. So, how can they move the markets? Tom Williams, inventor of volume spread analysis, was a syndicate trader in the US and is one of the very few smart money traders to spill the beans on how the markets really work. He explains how the markets are moved.
Well, the thing is, you see, if you're a professional trader, you've got to do your utmost to buy on low depressed prices. And the best way to do that is to create bad news, put out rumours, do whatever you can, seize the opportunity of some serious news coming in, and then the market's markdown hopefully shakes people out of that. There was one example that we used to get up to all sorts of so-called tricks. I mean, we used to trade Teledyne, and Teledyne, the actual company, used to have an annual general meeting in Beverly Hills, and we used to plant people in there. In the meeting, there'd be quite a large room with perhaps several hundred people in there, and all the directors would be sitting up on the stage, you know, behind the table looking out at you. But we'd have planted questions to rather encourage people either to buy or encourage people to sell. We'd be asking awkward questions, like we might stand up and say, is this correct? We've heard secretly that you've got a huge order from Saudi Arabia for your products. And of course, there was complete fabrication. Then the directors would look at each other and sort of shrug their shoulders. But the audience heard that and they think, aye, they've got something going on, they're keeping it secret. And that would definitely have a nice big surge of buying next day. If you were distributing, we'd say, sure, we'll let you have it all. Because we've bought in the lows, we're now encouraging people to come in and buy it off us. That goes on all the time, that type of thing, if the opportunity's there.
Markets have always been manipulated. Here's just a few examples. Let's begin with the British petroleum oil spill disaster in 2010. On the 25th of June that year, the shares fell to just under $27. The news was grim, and the pundits and reporters were talking in terms of huge losses and a possible breakup of the company. And everyone who had shares was looking to sell in full expectation that prices were plummeting. And sell they did, straight into the hands of the smart money professionals who bought cheap. Within 6 months, the price of the stock doubled. Buy cheap, sell back when the market rises, and that's how the game is played. On May the 6th, 2010, something very strange happened in the financial markets. This day is now referred to as the flash crash, because no credible explanation has been provided by the regulatory authorities as to exactly what caused the crash or who was responsible. In fact, many investors begin to suspect that all was not what it seemed to be. CNBC's closing bell anchorwoman Maria Bartiromo was reporting on the day the flash crash happened. Fellow reporter Matt Nesto was explaining some unusual anomalies in a number of stocks, even though the mainstream media claimed that it was caused by a lone trader hitting the wrong button, B for billion instead of M for million. Maria saw through it straight away.
A penny. So those are at least 8 names that they're going to have to track down on top of the Accenture trade, where we have the stock price intraday showing us at least, we'll assume, a bogus trade of 0.
That is ridiculous. I mean, this really sounds like market manipulation to me. This is outrageous.
It happens a lot, Maria. It really does. I mean, we could probably ask the NASDAQ. They may not want to say exactly how often it happens, but it happens frequently, and they go back and they correct. And the thing that stinks is if you, in good faith, put in a trade and made money and then lost it, you lose it.
What we actually witnessed on May the 6th was a giant shakeout of the market. The smart money were expecting higher prices and wanted to catch the retail traders by marking the price down heavily before moving the price up. They were bullish, the stocks were going to rise, and they wanted to buy at the best possible price. Wouldn't you want to do the same? Buy it at the lowest price, knowing you could sell it later for much more than you bought it for. Qantas soars to record half-year profits is the headline on February the 23rd, 2016. Lower oil prices have helped Qantas post a record pre-tax profit, and best first half profit in the Australian Airlines 95-year history are used directly below the headline. All the news is bullish. The stock has been going up and up because it's in an uptrend. To the retail trading and investing community, this appeared to be a great opportunity to buy the stock because everything lined up. And if you didn't go into the market by now, you'd miss the move. Okay, so buy. What happened? The stock plummeted spectacularly, and the uninformed retail traders said bye-bye to their capital. That's the trading game. Buy low, sell high. Be a predator, a clever predator that understands exactly how the prey think and act. Smart traders appreciate this and understand that quite often all is not what it seems. The media, the sentiment and the emotions will often lead to poor trading decisions and big returns for the professionals. The good thing is that whilst the smart money try and disguise their activity, there's one place where they cannot hide: the price chart. And in this presentation, we're going to show you how to read the footprints left by the smart money on any price chart, whether it's a currency pair, a stock, commodity, or a derivative of some sort. In the next few hours, we're going to show you how the interrelation of price and volume can help us determine whether the smart money is buying, selling, or not participating. And it's this interrelation which forms the basis of the volume spread analysis methodology. We'll show you how you can identify the tops and bottoms of a market in foresight, not hindsight. We'll show you how you can use the three-stage trading process, scan, confirm, trade, to form the basis of a powerful trading strategy so that you can trade in harmony with the smart money. We'll show you techniques that will help you manage your risk and optimize your trading. We'll show you why the media is key and how to trade the news and the volatility often caused by it. In the next few hours, you'll learn things which will enlighten you as to how the markets really work. And you'll discover knowledge that only a small fraction of the trading community know and understand. So welcome.
Okay guys, thanks very much for watching that. Just quickly, notice on that particular video, we talked about Qantas, and it's interesting that the news was the most bullish news about the Qantas chart I've seen for years. It was record earnings. And a lot of Australians were rushing in to buy Qantas thinking it was a bargain, but it was at a top, and we had a signal there, you may have seen it, called the end of a rising market. You saw the indicator come up. Now that is a very, very powerful signal. Now Oscar's asking, if I wanted to trade stocks using Smart Center Pro and trade options with stocks, can I do that? And the answer is absolutely yes. And in fact, I don't know if Danny's still here, but I've got with us in the room, I believe he's still here, it's probably late there, but Danny, if you're here, let me know. And certainly I know it's probably very late for, yeah, you're still here, I think. But with me is Danny Eunice, who's the author of a book that's about to be released in a few weeks' time, which is going to talk about how you trade options using volume spread analysis and Smart Center Pro. I'll bring Danny in quickly. Now let's just quickly, in a minute, Danny, I'll get you to do a sound check. Before we do, we're going to just bring up Smart Center again for the futures market. Now you can see that something interesting has happened here on the New Zealand dollar. Now let me ask you again to see how observant you are here. Looking at all of this Smart Center Pro scan, what do you notice that's different about the one right at the bottom, the 6N? What do you notice about the bottom one? Have a look closely. What do you notice? Something's different there. Yeah, Harvinder, that's correct. Black box, they say. Yes, yes. It is becoming aligned. Yes, it is starting to align. But this is here. Now you might say, why has it got a half a black box on that 1 minute chart? Well, this is a development that we've been working on for some years. Now what Tom Williams taught us when he was here was that markets would form very often an arrowhead. So let's go to the New Zealand dollar, okay, and we can see very clearly on the weekly chart we've got these narrow spreads coming in. But if we go down to the 1 minute chart here, right, we can see we've been in a strong uptrend here, and we've got these black boxes that are appearing, and every time the black box appears we break out, okay, and at the moment we just broke out to the upside. It's only a 1 minute chart. These are far more powerful, by the way, on a smaller time frame. But what's happening is when a market goes into consolidation like this, it forms almost like a pendant or an arrowhead like this, and you'll notice that the range of the bars start to narrow, and then bang, it breaks out to the next level. Then we'll get another arrowhead coming in, and then bang, it'll break out. This is what this is identifying. Now they are far more powerful on a 15-minute chart or an hourly chart than they are on a 1 minute chart, but you can see where it's moved already today. You can see the strength on the down moves. You can see it's retraced. There's a test. There's stopping volume. Now we've had something happen here. Let's have a quick look. Okay. So what this black box is signifying is that there's about to be a cause being built for a breakout. Now often if the trend is up on the bigger time frame, if we go to the scanner here, you'll see that actually it makes sense why it's breaking out to the upside. Because first of all, we can see, forgetting the weekly chart, which is still negative, the daily chart for the last 6 days has been green. The 4 hour chart has been green and going up for the last, 48 hours? And here you've got a test as the market goes up. Over here on the 60-minute chart, we've got stopping volume. But over here on the 15-minute chart, a reversal. Now that has got a box around it because from the scanner built into this system, you will get an email if you set it for email alerts to email you when that principle appears. And let's go and look at the 15-minute chart now and show you that principle at work. Here's the 15-minute chart. Notice the market moves sideways as they sell into it, and then suddenly you have this big increase in volume on the down bar. It's the highest volume for some time. It produces here a green signal, but the next bar closes lower, so that signal's not been confirmed. But finally here we get the reversal. So they mark the price down to the previous area of support, they reverse it, and then for the next hour and a bit we go higher. If you want to participate in that move, you then jump down a time frame, and you can see very clearly down here where the market tests, and then here green diamonds, green medium-term trend, green volume thermometer. That's what you're looking for to take a higher probability, lower risk trade. There's always risk involved in trading. We're trying to find probabilities and put those probabilities in our favor. Okay. Is there any questions so far on the futures charts that I've shown you? Because what I'm going to show you next is the settings for those of you that have Smart Center Pro that are optimal for the futures market. And I'm going to give you all, regardless of whether you own Smart Center Pro, a copy of the mentorship course and the manual which explains these settings, so you can decide for yourself if it's something that you want to have a look at. Lex, I did actually look at the DAX, funnily enough. Actually, I only looked at it yesterday, and there's a lot of weakness appearing, but it's not yet ready to turn as far as I can see. So I think you've got to be very, very cautious looking for shorts at the moment. They're not there yet, but I'm certainly watching it very closely, and as soon as I see a trade setup, it will alert me in the Smart Center Pro. Now, here are the parameters. Now, ignore this for the moment. This is just colors and fonts. You can set everything to be color, to whatever colors that you want. But the alert parameters are the most important. Now, here is the parameters for those of you at Phoenix. This is what you want to set. Okay, so 60% of the trend of the time frames aligned. That means if I'm monitoring 7 time frames, at least 4 of them need to be in alignment to trigger the trade. Okay, I only need 2 bars for trend alignment, and here I'm not using the volume thermometer, I'm just using the medium term trend and the short term trend. The reason for that is when I put the thermometer on, you miss quite a few trades. So I like to just use my own analysis. So by using the middle and the short-term trend and switching that off, you'll get more alerts. I'm allowed to accept one of the time frames not in alignment. That means if the weekly, the daily is in alignment, but the 4-hour is grey, but then the 60-minute is in alignment with the bigger ones, it will still alert me even if one of the time frames is not aligned, which is fine because I still need to know if the market's moving in a particular direction. So I always have that ticked. I also accept one time frame in the opposite trend. So it's possible that the weekly, daily, 4-hour chart is going down, but the 1-hour chart is going up. You still need to know that there's a potential trade coming, because remember, if they're marking it up on the 1-hour chart, it will start to align short on the smaller time frames. So I need to know that they're marking it up, which is why I put that tick in there. And then I return to the scan. If the trend disaligns and it goes into neutral, it returns to scanning automatically. And of course, we want to show the black box. Now, if we look at the parameters for triggering the trade, we have something now called trigger numbers. And these are very straightforward. And in fact, I can show you them visually on a chart. Even though the Smart Center Pro doesn't draw them, I draw them manually. And it's all based on very high volume bars. Now, can everyone see, please, the British pound futures contract here. Yes, Aaron, that's exactly what it's doing. It's telling you that potentially there's about to be a breakout in that time frame, which we just saw on the New Zealand dollar. So yes, and that's what it's representing. It's representing what you see in the volume thermometer. Yeah. So here, notice, where do we notice the highest volume on this chart? Remember, this is volume at the bottom. Where do we notice the highest volume on this time frame? This is the 60-minute chart of the British pound 6B futures contracts. Where do you see the highest volume? Just tell me where you see it. Where do you see the highest volume on this chart? Yep. Yep. Robin, in answer to your question, yes. Do you look for trend alignment in the medium term for swing trading stock? I'm going to finish the seminar with a stock scan and a stock analysis. So I'm going to do that. Don't worry. Let me just finish my thoughts here on futures before I get to the stocks. We've only got another 20 minutes, 30 minutes to go here. I'm going to cover stocks. So don't worry. If you're a stock trader, we'll cover it. While everyone's identifying this, Danny, do you want to just do a quick sound check? Because I know it's late for you in Aussie. I don't want to keep you up too long.
G'day, Gav.
Hello, mate. What time is it there?
It's approaching 3 a.m.
Mate, do you ever get sleep, or do you just not bother?
No, mate, sleep's highly overrated, mate.
It's totally overrated, mate, but you still need it. Anyway, listen, we got a lot of questions coming in about options, which is great. You've just written a book, which you're about to publish next week, Supercharge Your Retirement Account with Wyckoff Volume Spread Analysis. Now, you obviously are an options expert. You've been trading options for many, many years. And a lot of traders don't realise that you can actually insure your stocks by using options trades. And you've covered that in your book. Rather than doing a big thing, because we're going to do a webinar with you, I hope, in the next week to launch the book once it's all finalised.
Trend alignment to the downside has arrived.
Just as we say it, up comes Smart Center Pro, so that's typical. But I'll have a look at that in a second. So, Danny, just very quickly, just very briefly, just, don't take too long, but just explain to people that you can trade stocks using Wyckoff Smart Center Pro, and you can trade options. You can trade both. You can buy a stock and own an option in a stock to protect it. You want to sort of touch on that? It's in your book, and I think it'd be a good thing to introduce people to when we do the webinar in a week or two's time.
Yeah, because a lot of people, like you said, Gav, a lot of people don't know about insuring their shares. Because people simply just buy a stock and they're basically 100% exposed in the market. So you've been able to basically insure your shares, for the last over 40 years, and not many people know about that. So, and in my book I also show how you can generate a income on your share portfolio by using options. Okay, so and it's a perfect strategy for people who trade in their retirement accounts, because it's a very low risk trading strategy. So I share all that in the book, and then I tie that in with VSA and how to find good trading candidates for your options trade. So so it goes in depth into that as well. So so the book will be released hopefully next week. We're looking at launching it. So so it's a book that can really propel your trading.
Yep, we'll do a webinar with Danny next week, and it'll explain all that. Now, we've just had an alert come in on the Dow. Okay, now I've set it here, but it's also coming on my other computer as a short trade on the Dow Jones. Now let's have a look why. So we'll just go and have a look at this as it's happened. Now we've got here a markup. We've come in. We've got here our first sign of weakness. Supply comes in on a high volume up bar. okay, which we can clearly see. The market's marked up, the next bar closes lower. If that was all buying volume, we wouldn't come back down into here, but then they buy it back here. You get some stopping volume. It goes back up to the low of this bar, which we'll now call the trigger bar, which the software has already seen. And if I put an actual draw a line on this, you'll see it for yourself. And this will be very important now at the bottom of that bar there. Right now, what we look at is how the market reacts now at this level. Because at the moment, we've got the diamonds have turned red here, but they're definitely turning grey and red here. And you've got behind us, right at this top here, let me just get rid of that for a second. And let's put that back on. What you've got here is no demand. Okay, so you've got weakness there. The market's reacted to the no demand. We're back into this area and we're going up on low volume. So if we go up here on very, very low volume and the market closes in the next few minutes here on low volume, then we should start to monitor the 1 minute chart for a retracement and a potential short trade. So I'm already looking for shorts here. It's the only alert that's come in actually on futures today for a trade. You can see here that the 8 hour is negative, the 4 hours negative, the 60 is negative, the 15 negative, and the 5 and the 1 are being marked up. Now, if this 1 minute chart starts to turn red, then we'll expect lower prices. So I've got to be ready for it, and I'm going to put an order in just below for when it moves down, because I'm not going to go in yet. I'm going to wait for the market to push lower through this area. Now, if you look at the other charts, it's interesting. The NASDAQ, we know, was actually pushing up higher, but it's had a bit of a corrective move. Okay, so we've got to wait and have a look at this 1 minute time frame, and you see they're testing this level already. So they're testing into this area where the breakdown was this morning. See that market broke down here, there's the buying, and it's just corrected. So here at the moment, although we know the bigger time frames have been down, we can see the 4 hour chart. Look at that, that's a bit messy, isn't it? It's very messy, but it's made a lower low here, it's made a low here, and it's pushed up here. But if it comes back and closes on a low down in this level, that would confirm my suspicion that actually they're marking it down to buy at the lower prices. If we look at the daily chart, okay, we can see yesterday we had a test. If that test fails, we'll have a mark down in price. 4 hour chart, again, you can see what we just saw. 60-minute chart, just before the big move today, we had supply entering the market, which we can clearly see. The supply hit the market, came in, closed in the middle, we pushed up. Now there's not a lot of volume taking this instrument up. 15-minute chart, definitely got strength on the down move here, climactic action, but very often when you see that, you'll find the market go up on low volume, which is no demand, as we call it, and then the retracement will happen. So the 5-minute chart will be one that we want to watch, and lo and behold, as we've been thinking, there is a no demand bar. Now, what do? Nothing at the moment, because these are still grey. We wait for the market to confirm. So this bar needs to close lower than the close of that bar. And the best way to monitor this is going to be on the 1 minute chart. Because if the 1 minute chart starts to break down into this area, down towards the 30 level, it'll be considered to be seriously weak. Okay, let me just see if there's any questions on that while we move forward here. Okay, the audio has not gone. Lost audio. Can you all hear me, guys? I've definitely got audio running here, so it shouldn't have. Can everyone hear me all right? Yeah, so it may have gone out a little bit because of the internet. Sometimes that does happen. Okay, good. All right, thanks everyone. Yeah, okay. Okay, all right. Sometimes that happens. Now, interestingly enough, here we go, 1 minute chart, okay, right at this level where the breakdown happened, where the previous weakness appeared, we now have an up thrust. Now, an up thrust is an interesting principle because if the market reacts to the up thrust, we'll come back down to this low and then break it. Hasn't happened yet, so we're just waiting. It's very slow, but I'm poised because the only alert that I've had for the futures market has been this potential short setting up in harmony with the bigger time frame. Okay, so Okay. So everyone's Kat says try turning off Skype or anything else that may come in. Actually, my Skype is here, but it's not running in the background, so I haven't got Skype running on this computer, but we should be okay. Let's just let it run. Okay. Now, a few questions have come in. Let me answer them. Okay. Thank you, Pri. Okay. Said for a newbie like me, very interesting. Okay. Okay. If you are having sound problems and you're running Skype or you're running something in the background, switch it off, because apparently that will definitely cause a problem, which I agree with. Kat's just mentioned that. That could definitely cause a problem with your with listening to GoToWebinar. Could definitely cause a problem with that. Okay, so going back to stocks, okay, and how to trade stocks. First and foremost, when we're looking at the stocks, I'm using at the moment TradeStation in the background. Okay, I'm using TradeStation in the background. Now, how do we find stocks that are likely to move in the direction of either accumulation, which is buying, or distribution, which is selling? Okay, so what we'll do is let's go over to this screen here. Yeah, we have recorded this, don't worry. And very shortly, you should be able to see my scans. So you should be able to see the scans very shortly. Let me know when you can see that. Now, this is the end of day software program, Trade Guide at end of day, and I'm using, okay, you can see it. Stephen says, how long does it take to learn the Wyckoff method? Well, it used to take many, many months, but now we think we've condensed it down with Smart Center Pro into about 20 hours to understand it, about 20 hours of study. What does Smart Center Pro do if it finds a trend and we don't click the middle box? Then it won't alert you, Tony. You've got to click the box. You have to actually click the box. Because once it finds a trend for you, it'll alert you. It'll come and say, yes. It'll alert you to the trade. And then you click the box. It's telling the software, basically, find me the VSA principle. A bit like we've just seen on the Dow Jones. Now it's searching for signs of weakness again in harmony with the bigger trend, in harmony with that big trend. Okay. Yeah, Will says, I'm pure Wyckoff, should have found this software before. A lot of people tell me that they find this after they've studied Wyckoff for like 2 years, and they're like, oh. So let's go and have a look at what we're seeing here. This is a end of day Trade Guide at end of day V4 software, which is how the company started about 20 years ago. Obviously, this has been developed and developed and developed since, and it's using Metastock end of day data. All right, Metastock end of day data. Now, below us here, we've got weak stocks, which are acting weaker than the index. You can see the index has rallied and the stock has fallen. And we've got strong stocks, okay, which we can see here. Now, if I want to trade these either in options or in future options or buy the common stock, I want Smart Center Pro to tell me when these stocks are trending in alignment, because it works exactly the same way as the futures and the Forex charts that I've just shown you. Works the same way. So I showed you the futures, I showed you the Forex, now I'm going to show you in stocks, but I'm going to use something called TradeStation, which is a very popular platform. But you could use Sierra Charts, you could use Ninja Trader for this, wouldn't make any difference. The end of day software is not free, unfortunately, Al. No, we give a lot away for free, but not our software, because that's our business. Now it retails at $1,000, but we are doing a promotion on it for $500 for half price. But you'll need to email my wife Laura to get that. It's not available on the website. We don't sell it publicly anymore on our website. But let me explain to you how it works. And before I do that, I'm going to give all of you a link to the mentorship course, which explains in a lot more detail some of the things that I've shown you today, which you can look at your leisure. It's got 2 live trading sessions that we did. Okay, so you can actually see that. And it's also got the manual, which explains everything I've shown you today in Smart Center Pro in a lot more detail. I've just put that in the room. Can you just tell me, can you see that? I've just posted it in the room now. Can you see that? I've just this second posted it in the room. Can everyone tell me if they can see that? Okay, if basically it's a link to a web page which has got the very latest Smart Center Pro manual, and it's also got the mentorship course for those of you that have got Smart Center Pro. That's the latest. Good, it works. Okay, do have a look at that afterwards. It's got a lot more detail than I'm currently going into at the moment. Okay, it's got a lot more detail. All right, so what we do is we've looked at these stocks. Okay, you can see AXLN, CF, NVDA. All of these are acting stronger than the index. So if I put one up, you can see here the index goes up here, the stock goes up with the index. All right, if you look at the weak stocks, the index goes up, the stock collapses. That's what Wyckoff determined to be a weak stock. In a bull market, we want to buy stocks that are acting stronger than the index. In a bear market, we start to short the hell out of stocks or take put options on stocks that are falling faster than the index, because that's where you're going to make your money. And in fact, in a bear market, you're probably going to make money quicker than you are in a bull than a bull market, because everyone panics. And when everyone panics, there's an opportunity to make money. So let's go and have a look then at how we put that into TradeStation. Before we do, let's have a quick look at what's going on that short alert in the Dow. Let's have a quick look, see where we're at. Not moving very much at the moment, but nevertheless, it is definitely struggling to get through this trigger line here. It went up there once, came back down. It went up again on the up thrust. It's come back down. Okay, so here it's starting to break down. We're looking for the red diamonds to come in on the 1 minute. We know the 15-minute chart, the red diamonds are in play. We'd like to see an up thrust here, which would confirm the weakness. Okay, and on the 60-minute chart, we can see here where the weakness appeared. It's on an up bar, close in the middle, collapse in price. They push it up. And of course, now it's very likely to push back down into this bar where the very high volume is, because they're going to want to test it. And that's what all these alerts are in the background, showing us where the weakness has actually appeared. Now, when that happens, when we look at the 1 minute chart, okay, we're going to look for the diamonds to turn red. That's it. We're going to look for the diamonds to start turning red and the market to start breaking down, which is currently what it's doing. So here, there's your up thrust. Again, all happened live, as we saw. Okay, let's go back to Smart Center just to show you what it said. Okay, here was the Dow, right? We can see now that the 1 and the 5 are grey. We can see that the 15, 60, 240 and 8 hour are red. So we're going to watch very closely to see now if we get a principle on any chart, any time frame that breaks this down. It's already alerted me for a short at 46. They're testing these levels at the moment. Okay, let's just make sure I'm filled. I believe I am. Yep. Okay, so I'm currently filled on this. That's fine. Let's just put the auto center up. Just bear with me. Okay, good. So now we've got 10 ticks so far. Now what we'll do is we'll see where we're likely to go. Now, first of all, again, we're going to put where the previous area of support was. All right, so we're in this we're right in the middle of no man's land. We know that the resistance line was up there, which is where I've got the stop up here. Like to get my stop to break even very quickly. Again, if it breaks this lower line in the next 20 minutes, that's where it's going to come back down to, all the way down to 9680. Now the reason, again, let me just be very pedantic about what we're doing here. We look at what Smart Center Pro alerted us to. The only short that it said in futures was this one. And the reason it did was what was happening on the 1 minute chart and what was happening on the 5 minute earlier. Okay, so this will start to turn red. The next indicator here will very likely, you'll see a red diamond start to appear as this breaks down. Now, when that red diamond appears, all it's confirming is the market's changing behavior on the 1 minute time frame. But keep in mind the golden rule, and that is you're trading in harmony with the biggest time frame. right? And the big time frame is, of course, the weekly, the daily, and the big time frames. So all this is doing is not surprising. They've marked it up. Here's the weakness at the top, just here. First point of supply. Here's the upthrust that we saw, which is one of the reasons I wanted to get short, because there is an upthrust there. And now this is the support level right below us, right, which would make a good target, because that is where they rigidly mark the price down. So they're going to come and retest where the high volume is. This line is now a trigger. It's a key area, a potential area to add to the position. The reason is that the market here has found supply or sellers at that level. Sellers at that level. Okay. Now we've got a bit of buying coming in here. So what I shall do is I'm going to bring the stop here. So I've locked in some profit here, and let's see what we can get. Again, if any of you watched me trade, this is why I like to do scalping. I like to get into the market, get some profit, and then get back in when it goes back up. Because again, with any of these trades, what you're trying to do is just lock in some profit, okay? And that's it. This trade has been like 8 minutes. Lock in some profit. I'm only trading 2 lots, by the way. This is a very small account. Okay, great. So we filled on that one. Okay, so we're filled on the first trade. Now there'll be another one. All I'm going to do, the reason I've come out the trade at the moment, we've got some strength come in and the market's popped up. Okay, no problem there. It's a scalp. And you can do that if you want to use a 1 minute, 2 minute, 3 minute time frame. Absolutely fine. Absolutely fine. There's no problem with adapting Smart Center Pro for your style of trading. Everyone is different. Okay. Now let me just take some questions, because before I go to the stocks. I didn't trade the NASDAQ there. That was the Dow, just to be clear. That's the only alert that had come in. It still might, if it breaks this level, there may be another opportunity. Now, what I want to do, again, is come up and reset Smart Center Pro, which I've done. Now, see, the red box has come in. This could give us another trade. We could get another one on the Dow. The red box is in. I'm not going to do anything until Smart Center Pro tells me there's a no demand bar or a principal. Close that down, leave it in the background. Now, we talked about the stocks that we just put into the scanner. All right, so if you have a high volume bar that contains a higher proportion of selling, should the bar close in the lower half of the bar? Conversely, if there's more buying in the volume, should the bar close in the upper half? Not always, Gary. It's a good question. Sometimes, looking at the examples, the explanation of a high volume is that it contains selling. Right. Well, let me give you an example, Gary. If you look at a price bar like this, right, that's got a red indicator on it. Okay, let's just get rid of that trigger number for the moment. Let's just get rid of it. Okay, so here's an example, right? Now, read the dialog box. This is the key to learning this software. It's very intuitive. If you open the boxes and read them, it tells you where the selling is and why it's there. Let me read it to you. SOW7, which is sign of weakness, which means it's a selling opportunity, which is why it fell. That was the second selling opportunity right at the low. That's where I took my trade, and I came out here, right, for $100 or 90 bucks. Didn't get a great fill. May get another one if we break this low, right? But it's not very busy today because the Fed are about to speak. So to take a trade there based on Smart Center Pro, Smart Center Pro was dead on. There was weakness and the trend was down on the big time frames. This is an up bar, it says. An up bar is a price bar that closes higher than the close of the previous bar, showing an increase in volume, suggesting supply, which means sellers, has entered the market. If volume is ultra high, this could be climactic. Well, actually, in this case, the ultra high volume has to go into this salmon area. So it's just basically high volume on this up move. Okay. Sometimes this can be a breakout through an old top, which is a sign of strength. However, make sure that it's not a false breakout. Well, it's not, because there's strength. There's basically a big down move in the background. It's not breaking out of an old top. There's a downtrend in the background. Look carefully at the background. Do you have strength or weakness behind you? After a period of rising prices, there we have them, okay? After a period of rising prices, this could be the start of distribution by one or more professional groups. If there's an old top to the left, this could be absorption. Well, there is an old top up here, and it's come all the way down. But what we want to know is, can we confirm they're selling there? Now, this is for you, Gary. You asked the question. Read the dialog box. Very clear. Future. If the next bar is down, which means closing lower than the close of the previous bar, this confirms the weakness. Okay. Also, high volume up bars on narrow spreads show further weakness and selling. That's where I took my trade. A high volume up bar, narrow spread, closing on the low into a previous area of supply. That's why Smart Center Pro gave the short alert, because it was in harmony with what was happening on the 4-hour chart, the 60-minute chart, where the weakness was, the 15-minute chart, all red, the 5-minute chart, which is just changing, but the 1-minute chart was indeed, although it's now choppy, it was in the right place because there's weakness in the background, and this is in harmony with the big trade. And actually where I took my profit was dead on, right? Increase in volume, narrow spread into an area where they previously supported it. So I'm trading in a range, making profit on the short within the range. Very logical, nothing complicated about this. And again, it was the only futures alert that I've seen so far. When the red diamond appears, when is the best time to enter the trade? Is it too late to enter the market after the red diamond? No, you don't have to always wait for the red diamond, because you see the red diamonds on the 15-minute chart are here. On the 60-minute chart, they're definitely there. Look, two red diamonds. The 4-hour chart, they're here. So for the last 8 hours, they're red. On the 5-minute chart, they were grey. We had 2 red and grey, but we did have the weakness. No demand, no demand. Market fell. And then in the 1-minute chart, we had the upthrust into a previous area of supply. This is absolute classic VSA and Wyckoff. This is exactly it. Weakness, when it appears on an up bar. An up bar is a price bar that closes higher than the close of the previous bar. But if that's all buying volume on this very high volume bar, if that's all buying, by the way, most of the retail traders who don't understand this will be going long here, because their MACD, their stochastic, their moving average will be telling them to add to their positions. And that's what happens to them. They get killed. So I shorted the market here. And the short opportunity, which was only lasted a few minutes, netted us with 2 lots, $90. Okay, and you can see the trade here. If we look at the last trade here and the trade here, you can see here that we bought back at 39 and got up here and went in just above about 50. So 11 ticks. Okay, not much to write home about, but better than a poke in the eye with a hot stick. Yeah, look, don't get me wrong. Scalping is a strategy that you can use, but you don't have to scalp. You can swing trade like in Forex. Please note, this system is completely 100% customizable for your personality and your style of trading. Totally. Here we are now, look, back up into the same area. We may get another short here. Very possible. Okay, see that, but look at the range we're in now. We're very range bound on this particular 1-minute chart. Doesn't mean it's untradeable at all. It's just range bound. If it breaks out, hey, we could get a long trade because I've got strength in the background, but I wouldn't want to trade long at the moment against the bigger trend. Now, to finish off with, before I take any questions, I've now put all of those stocks, the strong stocks and the weak stocks here, into TradeStation. Okay, so this is Fossil. You can see here, we've got a sign of weakness, 5-minute chart, supply coming in, boom, down we go. This is a 5-minute chart, but I'm running the scanners on the big time frames and the small time frames. So if I put on Smart Center Pro, listen very carefully, as all 20 of these stocks are now being scanned.
Trend alignment to the trend alignment to the downside has arrived.
Okay, so not surprisingly, the stocks that are trending down are the ones that were picked as weak in the scanner that I used in our end of day software program. For anyone that owns Smart Center Pro, you will get the end of day software as part of your package. Okay, so you don't have to buy it separately. Here, I'm going to now mark these 3, which is M, Urban and LB, especially Urban, okay, URBN. Look at the time frames, everybody. weekly down, daily down, 4 hour down, 60 down, 15, 5, 3, 2, 1. Ignore the 5. These I don't even look at. I'm interested in these time frames. That is weak. Let's go and have a look at that instrument, okay, because this is a put option trade. Okay, we can, oh, well, crikey, this is, I mean, this is as obvious as it gets, right? Here's your high volume on the up bar, okay? You can see it very clearly here on this chart, on a 5-minute chart, okay? There's a supply coming in. There's the volume, massive volume, up bar. Look at the volume, highest we've seen. Knocks the stock sideways, come over here, no demand. And there's your move down. And that's 5 minutes. William says, what's the difference between the scanner and the Smart Center Pro? The Smart Center Pro is monitoring all of those time frames in all of those charts, but it's looking for specific triggers and specific principles that you set it to. So unlike in the scanner where you can't do that, in Smart Center Pro, what we can do is we can put the settings up here and we can say, first of all, which indicators we want to search for in Smart Center Pro. So we can search for end of a rising market. We can search for all of these just by left clicking them. Okay. We can search for bag holding if we want to. We can search for testing, which is my favorites. In a rising market, that's what I look for. And of course, in a falling market, I'm looking at no demand. So you can see all of my scanners here for stocks are looking for no demands in a downtrend and testing in an uptrend. So that's the first thing. The trigger parameters, this is now a trigger number that's not built into the scanners. What it's done is exactly what you just saw in the Dow Jones. It's looking for areas in the background where you see a principle, and when the market goes back up to the price level, it triggers a trade. Give you another
trend alignment to the trend alignment to the downside has arrived.
Okay, we'll just reset those. So just to repeat that and make that clear to everybody. So looking at the Dow Jones trade, okay, you can see here that there was high volume on this up bar. I have marked the trigger number with a line, which you can see here. Okay, but that line is in Smart Center Pro, but it's invisible. You can't see it, but the software can see it. It projects it out, and when the market goes back up to that line with a VSA principle, such as here, an upthrust, it triggers the trade, William. That was where the short came. Now, if you were trading 20 lots, 50 lots, whatever, of course, that would have been a much bigger trade, but it was still the trade. And now we're back up there again, look. And we got another principle appeared. Let's just get rid of that for a second. Into the same area, it's the same thing. Right, now again, this could go either way, but if I see a no demand bar now, we'll get an alert. But it's doing the same thing. And this is live. I mean, this is not with PowerPoints. You're seeing it actually as it's happening. Yes, you can. Will, can you change the scan parameters for each individual instrument? No. I don't think you can do it for each individual, and you wouldn't necessarily want to be honest, because unless you're trading, I mean, obviously, if you're trading Forex, you may have a specific setup for Forex, and my Forex setup is slightly different from my futures. I'm using 2 versions of Smart Center Pro, but for each individual instrument, there's no need to, because if you're trading futures, the rules that are set in Smart Center Pro work for all futures markets. The same principles will be there. You don't need to change them for each instrument. In fact, the whole idea of Smart Center Pro is that once you've got your parameters set, it will work for all of the futures markets regardless, because they all move the same way. What is the significance of the Smart Center Pro on UA on the 1 minute time frame? UA, I'm assuming that's a stock you were looking at there. Urban Outfitters, yeah. Let's go and have a quick look. I've got the 5 minute, and I can't see anything on here, Aaron. You mean on Urban? I think it's the 5 minute chart you were talking about. Let's have a quick look. Let's go to the week stocks. It's a 5 minute. I've got no black box on my chart here, but let's have a look on the scanner, because it may well be in the scanner. So yeah, here it is. So here it's the monthly chart. All right, it's not the 1 minute at all. The 1 minute's here, Aaron. This is a monthly chart, which is why it collapsed. That's why it fell. So it picked up in a monthly chart a clear area of where the trends or the market was being squeezed, and it broke out to the downside. That's why it's a monthly chart, Aaron. Don't make that mistake. It's not a 1 minute, it's a monthly chart. It starts with the biggest time frame down to the lowest time frame. Jim, I'm not going to have time to look. I've got loads of people asking me to put up different stocks. Unfortunately, I haven't got time to do that because I've got to go to a meeting, so I can't look at everyone's individual
sign
stocks.
of weakness has arrived.
Okay, right. So we've got a sign of weakness here on M. Okay, which is, again, you can see here that we've got lots and lots and lots of red here. 1 minute chart has just come up with a no demand bar. If you bring up the scanner for the stock, you can see here, monthly chart, no demand. 7 or 8 months ago, stock collapsed. Weekly chart, no demand. Stock for the last 3 weeks has been going down. Daily chart, well, we can put up the daily chart, and this is M, this stock. So let's put that up. Okay, and
trend alignment to the downside has arrived.
okay, so here's a stock quite clearly on the daily chart. You can see it's gapped down, it's taken out price support, it's weaker than the index, as we can see. There's the weakness at the top on the daily chart. You can see everything's negative. It's red. The volume thermometer and the trending system is red. That would be a put option trade. Oh, okay, Robin. Okay. Yeah, KQ, no problem. If you did not get the link for the this has got, if you've got questions, go through this first, okay? You've got the mentorship course 1 and 2, which explain, again, it's got live trading in there. You can see it all for yourself. Plus it's got the manual, okay, and my trading plan for Smart Center Pro, which I give away freely. I don't hold that back because I know it works, you know, and I know that if I help you, it comes back to me 10 times. That's just why I want to help you. So I do these things because I enjoy them and I enjoy helping other people to make it in the market, because you can make it in the market, but you've got to know what you're doing. It's very simple. Now, Smart Center Pro, of course, makes the whole thing much more easier to understand. I do accept that the Wyckoff method and volume spread analysis can appear to be quite complicated because it is actually against what you would think. If your price is going up, you want to buy it, which seems totally illogical to me. Why would a retail trader want to buy something that's going higher than when he could have bought it when it was lower? Doesn't make sense. Yeah, if you want to contact me, the best place to get hold of me is to email my wife, who manages all my affairs because I'm too busy. And her email is laura@tradeguider.com. And if it's a Smart Center Pro inquiry, you're interested in talking to me one-to-one, you please put in the headline Smart Center Pro, because otherwise she won't know. And we do, please bear with me. I'm obviously got a lot of things going on right now. I'm managing a fund, and I'm obviously starting trading the futures accounts as well. So it's really, really busy, but I will take a couple of hours out of my day to talk to people who are interested, because I want to help you guys. For those of you at Phoenix, you guys have now got the manual. You've all got the Smart Center Pro set up for you. So again, Steve there at Phoenix, if you've got any questions for the guys, let me know how they're getting on. I mean, the first 2 days looks like it's been really successful from looking at the account. So just come back to me on Friday, please, with your report. But so far looking really good, especially that British pound trade. That was really good, Steve. Well done. Congratulations. Very good trade. Yeah, if you want details on the Smart Center Pro, it's on our website. Simply put, just go to www.tradeguider.com. When you get to the front page, very simple, come down here to professional trader. Don't go to retail, because this is aimed at professionals. It's not aimed at the retail market. Click on the professional trader, click on the button, okay, and then over here to the left is a lozenge which says VSA SMART Center Pro. If you click that button here to professional, it takes you through to the video that we did at the CME, and it takes you where we launched, and it takes you through and gives you all the information about Smart Center Pro. There's also there, if you're a fund manager, we've got several fund managers in here who are thinking about Smart Center Pro, don't email Laura, fill out this form. okay, because that comes, this one here, beg your pardon, that comes directly to me, all right? That is a form for prop firms. If you're a bank, an institutional bank, we've got somebody here I know who's from bank today. If you are interested in that and you want to see it again live in the market, you can fill out that form. That goes directly to me and bypasses Laura directly. That form is it's a secure form, and then you've got all the details of the packages and everything as you go down. Okay, so you can see the different pricing options. Okay, you've got yearly, quarterly, monthly. We do have an outright purchase option as well, which I know Phoenix are going for, which is at the top there. This is let me be clear, this is a professional piece of kit. We're using it for our hedge fund. It is a Smart Center Pro. That's why it's called Smart, because it follows smart money, as you've seen today. It definitely works. No argument about that. But again, like everything, you do have to put in a little bit of application. You do have to do a little bit of homework. You do have to do a little bit of studying. Not much, 20 hours. 20 hours of reading the manual, practicing with it in demo mode, and going through the 2 mentorship courses I've given you for nothing. Have a look at those. Yeah, the settings for stocks, a good question, in Smart Center Pro. Okay, if you are looking at the settings for the stocks, click on here. You can see here, I'm just using the short-term trending system. I'm showing the black box. I'm not even using the medium-term and the long-term trending system at all. All the others are the same. All right. Trigger parameters, I'm using 50 bars, using trigger numbers, which is the high volume bars. And I consider price action inside the trigger, which means if you get a high volume bar with a wide spread, but you get a VSA signal within that widespread bar, I still get the alert. And you can see here, these are the main indicators that I'm looking for. Obviously, the main ones are no demand in a downtrend and testing in an uptrend. That's really what I look for. There's nothing much. I mean, you can certainly search for end of a rising market signals here. You can
trend
search
alignment to the upside. Trend alignment to the downside has arrived.
Okay, so we'll just set those again. Good. So Ray, that's the settings for the stocks. That's what I personally use. Again, you can. The wonderful thing about Smart Center Pro is you can, if you take it if you've got it for a few weeks, and you can literally play with it each day and find the optimal settings. What I did when I first got it, let me be clear. This is what I did. I didn't go and trade real money with it. Okay, I put a simulated account together, pure simulation. I recorded every single trade that I took. I recorded the screen. I recorded my entry, I recorded my exit, and I recorded my P&L. And after 2 weeks, I was able to see that certain things were working better than others. But the settings I've now got, which are also in my trading plan, you'll see there what I look for, are the ones that work for me. And if it works for me, it has to work for everybody else, because I'm nothing special. I mean, I think my IQ is about 25. I'm not particularly clever, but you don't have to be clever to use this. If an ex-police officer can become a fund manager with this, then anyone can do it, honestly. And I truly believe that. I'm not joking. You don't have to be a brain surgeon to figure this stuff out. In fact, I found that if you're a pilot or a brain surgeon or a doctor, you're looking for certainty in the market. And a lot of people like that find it very difficult to make the decision to trade. Smart Center Pro takes that away. It's shown you, as you saw today in the Dow, it takes out some of the guesswork for you, which means you can make a decision based on the evidence on the chart. Today, we had a short trade here to here. There's another one here, come back down. I didn't take this one, but it's in the same area and the market's come off. But this is because the Fed is about to speak. I reckon the big move will happen after the Fed speaks. Actually, that's where you'll get your big move. And you're very likely to see these principles coming in all afternoon before the Fed actually say their piece. Right, well, good question. If you're a retail trader, okay, but you want to eventually trade other people's money or do what I'm doing, become a fund manager, right? Of course, you're not going to be able to afford $25,000. I totally appreciate that, which is why we've got a training package, which is a 1-month package, which you get everything for a month. That includes a live trading session that we do every week. We also have, and you can cancel at the end of it. If you don't think it doesn't make you any money at the end of a month, you can say, I'm done, it didn't work for me. Or you can continue at that price monthly. Okay, so you don't have to commit to the whole $25,000 if you don't particularly want to. Most people, I have to say, have been buying it outright because we are able to negotiate on that price. There is some negotiation. There's no negotiation on these because, again, the 3-month package is even more reasonable. You get the whole software kit, all the Smart Center Pro, everything for 3 months. And again, you can choose your platform. You can have TradeStation, you can have it doesn't work with Metastock at the moment, but TradeStation, Infinity Charts, Sierra Charts, obviously Ninja Trader, which is very popular at the moment. A lot of people going for Ninja Trader. So yeah, all the details of that are just here on the website. Okay, just here. That's the details there. Does it work on Bloomberg? Not yet, but we are talking to them. Funnily enough, James, you must have read my mind. That's actually exactly where we're going with this. Funnily enough. Yeah, Terence, we do. The seminar on the parameters is what I've already given you, which was the link earlier on to the mentorship course. Let me just put that up again, just in case you didn't get it. It's just here, Terence. I'll just put it in the window for you. There you go. I've just put it in there now, Terence. Does it work with CQG? I'm not sure, William. I don't think so at the moment, but I will check with. If you want to email me, William, by all means, I'll check for you. I don't think it does at the moment, but it doesn't mean it can't, because we are working on other platforms as we move forward here. Okay. Good. All right, let's have one more quick look at gold then, because a lot of people have just said could have a quick look at gold. And at the moment, as I have to say, not much happening in gold. It's been going up, so I've not been shorting gold. We can see why. Look, it's got a lovely, lovely buying, shakeout down at the bottom here. All the principles that Tom, selling climax, and then a stopping volume. So that's why it's been going up. I don't see any reason to be short gold at the moment, for those of you that asked. Again, I always trade what I see. Gold has been very, very weak for a long, long time. Look, it's been collapsing. It's going up at the moment on some unusual volume. Let's wait till Mr. Trump gets in on Friday and is inaugurated, and then see what happens next week. I think next week could be, let's just have a quick look. Here we go. Sorry. Just go back to my thought process there. Here is your climactic action, the testing, the reversal, the test, up we go. Not much happening on gold. I'd wait till next week. I think next week will be a very, very good trading week. Yeah, I do think there could be a corrective move coming. I can't see it at the moment, though. I've got to admit, even in the Dow today, I mean, looking at the Dow Jones, there's a lot of buying down at this level. And if I look at the S&P, it's very obvious on the daily chart where the buying started down here. But now look at the narrowing of the spreads, the narrowing of the ranges. This could break out either way, actually. Really, really good. Could break out either way. I suspect it's going to be to the upside at the moment because I don't see any real serious weakness in it. But, that remains to be seen. Okay, everybody. Well, look, I've overrun a little bit. I wanted to keep this to an hour and a half. I will email you the YouTube video of this so you can get it. It'll be on our new YouTube channel, which is Trading the Markets and VSA Club channel. That's what we're going to be putting our public webinars on in the future. I won't be doing so many of them, but I know Danny definitely will be, and some of our other people that we're bringing in as educators will be helping you as well going into 2017. As I said, I'll just finish on this thought. Anyone can make it in the markets, right? Warren Buffett said, right, you only need an IQ of 25 or above to be able to make money in the markets. He said, but many people don't make it in the markets because they're human beings. They make poor decisions. They listen to the media. They listen to rumors, and they become impulsive. They see the market go up and they buy into tops. They see the market collapse like here and they sell, and then, of course, professionals buy. If you understand volume spread analysis and the Wyckoff method, which is what we teach you, and you're using the tool that we've developed for hedge funds, Smart Center Pro, you're putting the odds in your favor. There's no doubt about it. And if I've done trade after trade after trade after trade using this. The only thing I could see today, apart from Forex, was the Dow Jones, and it's a very quiet day for trading. And even then, you know, if we go back and just review that, you can see the logic behind it. Here's the weakness. Here's the upthrust where we made the trade. Here's the secondary upthrust. It's back down to exactly where support was, where I took my profit initially. In fact, it's right down on it. So this is just in a trading range. It'll break out. There'll be more opportunities down. Okay, William. Well, if you want to talk to me at all, you need any advice, then by all means, remember, email Laura at tradeguider.com. Laura is my wife. She manages my diary and my, you know, my time. Her email is simply Laura at tradeguider.com. She also has access to a lot of resources to help you as well if you're not sure which way to go. But Laura can certainly help you. Themistocles, nice talking to you here. And where are you from, Themistocles? Obviously, I detect it's well, let me ask you, where exactly are you from? I figured. Funny enough, I was watching. I've spent a lot of time in Greece, in many of the islands. I've been to Kos many times, but yeah, last night I was watching a chef called Rick Stein. By the way, sorry, I just don't want to jump here, but we just had a black box come in here. Look, see here? Now that's important. So this will break out. Definitely. It'll have a breakout very shortly here because it's in a very nice range. Let me show you why that will happen as well. Look, see here? We've come into a nice arrowhead. Right? So this is all going to think, and it'll break out. Watch this very closely. There will be a trade on this afternoon on the Dow Jones, almost definitely. Could be a big one as well, so be ready for it. But yeah, I love Greece. Yeah, I had a lovely time. Yeah, love the food, love the people. And I just came back with my wife in July last year. We went to Crete and we spent 2 weeks in Crete and had a great time. Yeah, this black box, look here, right below us. Remember we talked about this earlier, right? I said if that black box appears, which it now has, in the volume thermometer, and we know, look at the spreads of the bars. I mean, we were very fortunate to make some money on these shorts here. That was the one I took. But there's another one there. But look, they've come right down to support here, where the breakdown happened this morning. Support one, back up.
Trend alignment to the downside has arrived.
Okay. Back up, back down, back up. This is going to break out, guys. Definitely. So watch it very closely. You could have a very good trade here this afternoon. And all I've done here, just for my personal benefit now, on the Dow Jones, you can see here I'm set. If it breaks out to the downside or gives me a sign of weakness rather, here it's going to alert me because keep in mind the 8 hour, 4 hour, 60, 15 is all negative. If that 5 turns negative, which I suspect it probably will, in fact it will, I'm certain it will, that will go red very shortly. You've got trend alignment. That will give you the setup. Charles, I'll have to defer that one to Grigory if you want to email him. He'll let you know because he's in charge of that, so I'm not sure. Yeah, Andrej, the volume thermometer, it's very, very simple. It measures bullish versus bearish volume. Here is bearish volume, right? Bearish volume is increasing volume on the down moves with decreasing volume on the up moves, as we can see. So increasing volume on the down moves with decreasing volume on the up moves. That's bearish volume. And bullish volume is the total opposite, Andrej. Ha! You're a pastry chef and you met Rick Stein, have you? That's great. Yeah, I was just watching. Yeah, so you met him. He's a lovely guy, actually, Rick Stein. Yeah. Okay. Okay. Cool. All right, everyone. I'll let you go. Have a great rest of your trading week. Obviously, 2 more days to go till Donald Trump is sworn in. Should be a very interesting week next week. All Smart Center Pro users, there will be a live trading session on Tuesday of next week with me. Don't miss it. It should be a very interesting day. And I think Danny's going to join me as well from Australia. So come and join us next Tuesday, all Smart Center Pro users. And for all of you at Phoenix who stood in there today and you've been listening, thanks for your time. And I look forward to meeting you all in London at your head office. Take care. God bless everybody. And if you've got any questions about Smart Center Pro or anything I've shown you today, email Laura at tradeguider.com, and we'll be happy to help you. But please give us a bit of time. We are extremely busy at the moment. Thanks, everyone. All the best to you. Bye-bye.